All right, so I did see, oops, I saw the review. There are a few things there that um, I kind of want to point out. Let's start with, well, let's start with equities, I think, and like you went to the on the daily and you made like a analysis here of where it might go or may not go depending on where it is in this range. And I don't think I'm gonna use a 4 hour because daily is too much. And that's like that might be a little bit unproductive just because I mean it's good for identifying general levels, right? Like we know that all the liquidity is here and we know we're trading inside that. We have that VPOC there again in the low 700s, 25 700s, which is important. And we know the next big level here, if it takes out this area of liquidity, is down here in the between 300 and the 250s, which it just visited right now here after the open, right? And it just touched it and then bounced back up. So, um, but I think it's pointless to be like, okay, on a daily to be thinking, okay, so this, then we'll get here, and then when it breaks this area, it's gonna go down here. We have no freaking idea what it's gonna do, not even in the next few hours or the next day, let alone on a higher, especially equities, right? Like this is, um, there's a guy there in SMB, that one of the owners, Steven Spencer, and he used to do these videos all with SPY every morning, and I thought they were useless because how the fuck does he know what you can't go like on a technical, except for very key moments where okay, it's like when we went into a bear market, it was breaking below the 200 EMA. That's the 200 simple moving average. That's important. But other than that, how do you technicals? I don't know, man. You know, whatever. So that's I think that's perhaps I think we have to be a little bit more specific and um, obviously you zoom out, you identify those levels, and then find kind of like figure out, okay, so what's happening here? It gapped down, and it did gap down into that basically the 300s area, and then got back up, and we are basically trading in, again, the most important level here, which is the 25 700s, and we're back up into that range, and we need to see what it's going to do there next. um, we have to cross-reference with the news. So negative news over the weekend, negative sentiment in general, negative things happening, but no punctual news that's at that moment where it triggers and there's a catalyst. And basically, as it has been doing for so long, it just basically, yes, we had a gap down, but it just shrugged it off and then back up it goes. Um, um, Dealer positioning, like gamma dealer positioning options, uh, chains on SPX and VIX matter here, and this is kind of, again, they're saving it. This is kind of like they're on the bid, and just how it's been for the past couple of weeks. So apparently that has not changed yet, and so we need to understand that that's sort of like the regime that we're in. You didn't touch on, we have the rates, the Fed rate decision on Wednesday. So then how do we expect this to trade? How does it typically trade into a rate decision or an FOMC or anything? It trades very thin, and there's no real direction, and then unless there's like a real catalyst. So we need to keep that into, and that's probably why it's just floating back up into the 25 700 area, and it's going to trade in and around that area for perhaps until Wednesday, into Wednesday. Um, so I don't even know if I want to trade this thing because it's going to be so thin. So like when it's thin, it means that there's more algo manipulating it. There's less organic action, so so we'll see. I'm not sure. Um, Depends on how it looks at the open, but that's how I'm seeing this. And then when it comes to news, then we kind of have to like be a little bit more specific in terms, for example, the shutdown, the government shutdown thing. Okay, so we have, I, I think we should get into narrow down things and get as specific as to a point where we have a binary situation where if this happens, this is the trade, or if that happens, then this is the trade. Because if not, then it's just useless. Just like, okay, I'll just keep an eye on it. We'll just keep an eye on it and see what happens. What does that even mean? So what are we going to do? What are our plan depending on this scenario, that scenario? If we don't have a plan, depending on this scenario, then any analysis is just, it's not useless, but it's just, it's just commentary, it's just chatter. So, um, I don't know. We'd have to. These are the things that we have to sort of like think through and then come up with a sort of like rough plan or throw some ideas in. My opinion, if if um if we have a 75% chance and it's growing because this over the weekend it started increasing and maybe we'll get into 80 or 90%. It's pretty much a given that we're going to get a government shutdown. There's no way we're not going to get a government shutdown. Um, it used to be that every time we were approaching a government shutdown, like all the parties, government, the people that were the parties in conflict, they always tried to negotiate and be and strong arm the other side until the very, very last moment. But in the end, everybody knew that a government shutdown was not in anybody's interest and they would find. They would just, one of them would capitulate or they would compromise or whatever, and there would be. Um, mm, so that is not the case anymore because we have already seen that Trump is pretty much happy with having a government shutdown. So he's not going to go back out. Absolutely not. So and we've seen now we have a pattern because we've had two government shutdowns already, and this last one it was pretty much he was like, you know, for him it's political ammo. Like it's for his base, it's like okay, the Democrats are shutting the government again. So we are absolutely getting it unless the Democrats fold. They lost a lot of points and they got a lot of political um, points when they capitulated on the last one because they folded and the people that were behind them said, "Why are you folding now? Like why you know?" So that lost them a lot of their base. So I don't see them now that they've announced right now that they're gonna they'll shut down the government unless ICE is defunded. I don't see them backing out either. So the chances are super high, super high. What is the trade here? What does that mean? Because even though we have 75 over 75% chances that we're gonna get a government shutdown, what are the markets doing? They're just floating back up into the mean reverting into this area again. So they don't give a shit apparently. Again, it's just options driven. And obviously because we have also because we're heading into the FOMC rate, the Fed rate decision. So the trade is that if Trump for some reason says, okay, I'm taking, I'm now the ICE thing has never been really affected the markets. But now if we see a declaration, we say, okay, we're going to pull out ICE out of Minnesota or something like that, that may shoot up the markets because that may signal that he may consider, um, you know, maybe ICE funding is on the table. Who knows? Something like that. This is not going to happen 100%. But if he says something like, okay, so whatever, we'll fund ICE some other way or something like that happens. That's just gonna the markets are gonna go crazy to the upside because it's a counter. Um, it's a contrarian trade, and because all the positioning, all the bets are in favor of the government shutdown. So my opinion, that would be the trade. So not so much something to the downside. We are in the darkest negative sentiment we can be in, and still the markets are going up. So if we get something like that regarding the shutdown, bam, market will shoot up. Regarding Canadian, the tariffs on Canada, that's still kind of vague and still up in the air. So there isn't really that's kind of like a misinterpretation, I believe. There's no real trade deal with China. I think from what I read is that there was just an agreement to eliminate the previous tariffs that China had applied on Canada and vice versa when after Liberation Day, because Canada was with the U.S. and then Canada applied tariffs to China uh, because the U.S. asked them to. And it's just like walking back those tariffs. There's not like a trade agreement with China. So, and then Trump's threats are kind of vague as well because okay, we'll apply 100% tariffs on China, sorry, on Canada. If what? If there's a trade deal? No, there's no trade deal. So that wouldn't trigger that. But maybe he's talking not talking about trade deal, but talking about who knows? We need more information. Maybe it's just if I see you talking with Xi Jinping, or if I see you guys, that you guys are having coffee, then we don't know yet what's going to trigger the potential tariffs on Canada. So that's not something that is a catalyst yet. So what would be a catalyst if we get a tweet from Trump where it's more specific and it makes it more imminent or more real. Right now, it doesn't seem like it's anything real. It's just who knows, banter. So I think that's where we are standing with that. The political thing in China, I don't think that's a factor at all. I mean, it always is a factor, but it's not. I don't see how that plays, how the markets would have a read on that. Basically, mostly because it's just rumors, right? Because we never know what's really happening in China. Um, um, and the Iran situation is just like, the probability that that something's gonna happen is mixed, and there are most experts are saying that most likely we're not going to attack because because whatever, it's a difficult situation. It's not going to be as easy as Trump thinks it is, and if the conflict does start, you can bet that oil's going to go crazy because, again, the Strait of Hormuz, just um, there's the possibilities here are real for like last time, last Iran conflict, the oil shot up into the 70s, and and it was kind of like it was a real conflict, but at the end there was like some theater, like the Iranians' response was sort of like it was kind of clear to the markets that there had been a negotiation, and it was just a strike that meant nothing to save face, and sort of, so that was um, that and still the oil traded into the 70s. They stayed up there for a while and then it tanked. But this time around, it's going to be different because if there is a conflict in Iran, now it's an existential thing for Iran. I mean, Iran would not survive. If it's about them staying, so it's different. Then it'll be a real conflict. Then the response from Iran would be, I saw a couple of tweets there that could be, they could just literally just uh, send missiles into Dubai or stuff like, stuff that unimaginable. So that would that would oil would skyrocket. Um, Going to oil, um, and I just tried to put on a trade, and that was kind of stupid, and then I took it off. thinking, I don't know why, man, because this was, if we were reclaiming VWAP after a turn, or it would be different, like we did here, but that's not the situation here at all. So why was I trying to buy there? That was not making much sense. You did identify that 50, sorry, that 62, low 62 areas as I would say it's like the edge of the liquidity area that we're in. It's not a VPOC. So, VPOC is it's like the point of control of the consolidation, or the point of control, if there is a point of control, a single point of control of a liquidity area. But that 62, low 62s, in this case, why is it showing it's more like, well, it's more like 63, and that's not how I had it. Let me zoom out. um, we have here like 61.85. I have it here marked in like at 60, 62, okay, 62.50s, I guess. It was like from this consolidation here. Let's just go to the daily. But I remember like doing this analysis before, and sort of concluding that if we break above the low 62s, then the next stop is here, basically. So if we break above the 62s, then our next stop is going to be here in the 68s or something like that, and then probably just call it the 70s. Um, and you mentioned there that we could have some this area here, 70, be like the next area here, and we are trading here in this area just above 61. And then if we take out that 62, low to mid 62s here, then we have like a vacuum of liquidity here that basically that we would have a trade all the way up into this area, 69.70. So I think the thing that I think I want to point out is that you mentioned that if we get above the 62s, then we would consolidate something like that. And no, and I don't believe that's the case at all. If we get above 62s, we rally, and we rally hard. And in fact, that's what started happening here. The day that the strikes were imminent, and then Trump called them off, we were consolidating just below 62. Because 62, everybody knows in the market, it's clear that the market is taking that as the line in the sand, the low 62s basically. And and we had been on that sort of build up. We had been building up, on a choppy, but on an uptrend, and building up into that area. Right into the moment that was before the strikes were about to happen. And and we even started, the breakout was already underway when Trump tweeted. So we had already sort of like, we were consolidating sort of below 62. We tested it a couple times here, failed, tested it here, came back, tested it here, failed. And then finally here, look, you can see this volume candle here. We kind of like broke out of that little, took out these highs, pulled back into 62, and it was like, and that was it. And this rally, I remember seeing it on the tape, and this rally here had a lot of momentum to it. And it was just relent, and this was the beginning of it, and this was going to be a rally. Um, and that's why I said at the moment that this was pure market manipulation. Because it seems like he has somebody on staff or people there, like every time he tweets something, everything is timed with some sort of technical level in the markets, relevant markets to what he's talking about always. So this rally had already gotten started, and that's when he tweeted and he killed it. So, but that's the line in the sand, the low 62s. If we get, we're not like what you said there is, I believe, is not accurate. When you said like, okay, if we take out the low 62.20 and then we'll chop around and consolidate, we'll need to consolidate for a little while below 6. No, no, that's not going to happen. That's what we're doing right now. We're chopping around. That's what we've been doing for many days. When there's uncertainty, there's not quite clear what's going to happen. Okay, we consolidate and chop it around along, uh, we pull back into 59, then we dip below 59, chop around 59 for a while, chop 59 kind of holds, then we go, you know, held twice here. Then we kind of like make our way back up into the 61s, and then we're like consolidating, chopping around, but all below that line in the sand in the 62 area. If we are gonna break out of that 62 area, is because the conflict is picking up, is heating up, and once we break out of that 62, the low 62s, it means that that things are already like happening, and that's going to be the start of that's where we start getting parabolic. I don't see consolidation there after we do. I could be wrong, but that's my opinion. We're not going to see a consolidation there in the 62s, and it's not going to chop around there. But this is not a technical. Of course, the levels matter, and we use them as reference, but it's a catalyst driven thing. So um, that's my opinion on silver. I'm sorry, on oil. And as you can see here, it's kind of approaching there 62. It just sells off, comes back down. It's not even touching, not going back into that area until we get real escalation. It's just gonna chop around in these areas here between, I guess, between 59 and between 61. In this case, it went up into the mid to high 61s, but it's basically 61 and 59, maybe a little bit above 61, and it kind of tried here, consolidated here, and now maybe it will go back down to 60, even 59. Who knows? But this is the area where it consolidates. Um, um, the this thing, I believe it's only a trade at the beginning for us. Like this thing, okay, news is out, or the rumor, sometimes just a rumor, it's not an official statement. In this case, it's not Japan, but it's the New York Fed, apparently. But okay, news comes out, and then we got to move like this in US dollar, Japanese yen pair. And that's really the only move that, so then it just becomes, yes, they're on the bid, and you can expect this thing to go higher and higher and higher, but then this is not, from when I tried, it's not really tradable in the way we trade the other stuff. It's very thin, it's very slow, and it's just going to be a grind up. And if we had the ability to put on swing trades or whatever, this would be an amazing swing trade, because this thing is going to go all the way up into those areas that you mentioned, because this has been, they're going to bring it back up into at least a 155 level or something like that. Right now we're like, we made it down to 160. So um but this trade is over, basically. That this is something you need to capture there on the first day or on the open or whenever it happened, and there's no trade first anymore. That's what I believe, or in my experience, but I could be wrong. And gold and silver, well, yeah. So we don't know what's happening there. At this point, I mean, silver, I would not even touch it here right now, but whatever. All right, that's it.